Hello, everybody. Welcome back to a post-apocalyptic version of TRI, where we are in the Neo future, in the Tron Matrix, I guess you would say. I'm trying to see myself on YouTube. Let's see how I look, if there's decent like background. Oh, it looks pretty good. I look pretty good. Hello, myself. So I'm gonna listen. Oh, I gotta share my screen on Zoom, guys. So one second, and let me see how I sound on YouTube. Okay, so YouTube sounds okay. What do you guys think of the background noise? The little background music. Do you guys feel, is there a little bit of pause happening, or is it okay for everybody? I gotta share my screen with a Zoom call. Hold on one second. Let's share the Zoom call. All right, so Zoom call, you're gonna get. I'll just get my screen number 2. There. Damn. Okay, so no issues apparently on YouTube. Fantastic. All right, so I hope everybody had a great week. I'm gonna lower the background noise. Somebody said it's too intense. Let's lower it a little bit. What background itself? All right, well, I'm just gonna background too intense. Oh, this background. Well, we're not gonna use this every time. This is just a filler background. Do you guys know, to get a custom nice background, it costs like $300 for somebody on like Fiverr to make it. It's very expensive. We tried to find a really good custom background. I'm gonna get one. I will. We're gonna find a good one for TRI, at least for my show. We'll get one for Brian too, actually. For Brian, maybe we'll spend the $300, $400 to get him like a really nice green screen background. But for me, I don't know if I want to spend $300 on a really nice background. I gotta think about it. We'll see. But until then, you get the Neo Genesis thing. It's better than the closet. If you guys go back to my older videos, I'm literally in a closet. So I think we're getting better. I spent 2 hours with Josh. Props to Josh. If anybody knows Josh on the site, 2 hours getting this set up. Yeah, I also like a home background, but the issue is that where I am and the time that I do the show, it's just not. It doesn't work that well, and I feel like for doing the shows, it's nice if I'm in the bottom left corner and then there's no background. So we're kind of just using the background for the beginning, where it's just hello and kind of give a small update. Okay, so music is too quiet. Okay, well, how about that? I'm gonna leave it like that. Let's get the show started. We've got a lot to go through. I already wasted some time, and you know, you guys are actually really here to talk about the market, not about what I look like on the screen. But at least I feel like the camera is set up well now, and it looks sort of like what I look like in real life. This is basically about the same. Would I like to apply some filters? Maybe a little bit. But this is basically what if you met me in person, I think this is what I would look like. All right, let's shrink me. Okay. Little Julian over here. Put myself in the corner. Maybe I make myself a little bit smaller. We get rid of this silly background. And we just get into what's going on with the charts here. All right, so obviously the big thing is, if we go down to crypto, where's crypto? Crypto breath. Huge trigger, right? On February 13th, right here. That was the big trigger, the big news. And Brian, I'm sure, has talked about it. If you bought this breath cross, you'd be up, I think, over 10% on Bitcoin right now. It was a pretty incredible signal. So that's the one big thing, obviously, the breath cross in crypto. But what is going on with S&P? So S&P still is not crossed. You can see we have a W forming, but no cross, no serious buy signal. I'm curious what the breath is going to do here, because if we've looked at my charts, and I've talked about how I think this is kind of the pattern that we're in right now. We're in a 5-wave series, and we're completing the 5th wave now. So this is a fourth wave. Fourth wave is always just to take your money. Anybody that made money in the entire bull run, right? Here's my hand. All right, in the entire bull. All right, it's easier to just use the mouse. Here's the mouse. This 3rd wave, anybody that made a bunch of money here, the purpose of a 4th wave is to just take your money. So anybody that thought they're a master trader, they try to trade this fourth wave. They thought it would continue like the third wave, and the market just flatlined. So anyone that bought calls and puts is getting destroyed. And I talked 2 weeks ago about my theory with the market each level. If I think it was 2 weeks ago. I can't remember if it was 2 weeks ago or last week. But I showed, and go back to those Thursday shows to check. I showed how every 30 days the market seems to be going through a different cycle. And while January was the straight up cycle, now we're in a 30-day distribution cycle. And after the end of the approximately 30 days, give or take 7 days, 7 to 10 days, we will then revert back to a different cycle. Either we're going to go up or we're going to go down. Now I'm leaning towards the downside, completion of this fifth wave, and then we roll over because there's too many fundamental signals flashing red. Like things are not good. Okay. The yield curve is inverted. That's I mean, whenever that happens, it's obviously there's a sign that things are wrong. There's something wrong. Okay, I'm gonna take a little bit of drink. I'm having I never drink soda, never. But I'm having a little baby Coke. It's baby Coke. It's literally, I call it baby Coke. It's like literally this big. 19 grams of sugar. So I think it's okay. It's not that bad. All right, cheers with my baby Coke. Get this man away. What do you mean by roll over to the moon? Oh, I like this guy. Newer production. Appreciate your comments. Okay, so where's my little schedule? I'm supposed to be following a schedule here. I get in trouble if I don't follow the schedule. Where is the schedule? Show notes are here. Let me put it over here. Okay, so I'm supposed to go over breadth overview, big picture. We did that. Let's talk about econs. Let's look at Forex Factory. So the biggest econ was, if we go back a little bit, can I go back? All right, the biggest econ was core PPI, which came in above expectations, and that's why the market dumped. However, all it is using it as an excuse for liquidity hunting. I still believe that majority of the news that comes out is simply an excuse to hunt liquidity. There's no long-term reactions that happen in the short term, generally. Okay, normally the market is going to move in the direction it wants. If the news is sort of bad, the market will just hunt liquidity in the opposite direction and then revert back to the mean. So you have to be very careful with these news events. And you can see on the 1 hour, actually things don't look good. It looks very bad, which kind of ruins my, we're sitting right at support here, right? So here's my, right here is where we'd break down. So that was the big news that came out. Let me see if there's any other news I want to cover. Nothing else. Yeah, that's really it for the news plan. So we're bouncing off this uptrend line. You can see this uptrend line going all the way back to the beginning of this rally. And the question is, do we complete this fifth wave? Or is this it? Does the S&P just roll over from here and we head lower? And if this M's out, for example, chaos points to 3900. It's right in this area. Probably take out the liquidity lows here and then bounce. That would be the beginning of your first wave down. But like, I don't like how this is looking here. I didn't realize this was this bad. I haven't looked at, to be honest, I haven't looked at the S&P all day. So this is my first look. Let's go all the way back. Let's really look at this now. I'm going to take some of this off. I don't think we need this for this high time frame. It's just confusing. Settings, visibility. I don't want it on the weekly, and I don't want it. I want it on the 1 day, but not the 3 day. All right, so that's gone. Should be able to select both of these at once. Settings, visibility, daily, take it off. Okay. All right. So look at what happened here. Why do you think we paused? We had an 8 and 9 come in on 3 day. So of course we're gonna pause. Look what happened last time. Last time we hit a 9, paused, rolled over, had a big flush. So why would it be any different this time? Also, we're sitting right at this VIP level, and we're starting to M out. Does this look like, I mean, does this look healthy? Or does that look like there's actually some serious divergence happening between price and RSI, and the market's looking like it's ready to take a giant dump? I mean, this does not look good to me. Let me see weekly really quick. Nothing really from the weekly, except the weekly has not crossed above the VIP level. I talked about this last week. talked about this a couple times, that I really want to see the weekly above this blue VIP line down here before I can really get bullish on the market. Until then, I'm kind of just a bear, and I think we're liquidity hunting. So you can see, look at what we did. We took out the highs here. We took out the highs here. The only real question is, do we take out this high up here to get the liquidity up here? That's the yes or no question. If we go back to the daily chart. All right, so all my lines came back. Here's the daily chart, and here's what I'm looking at. This is our RSI uptrend, and you can see we're flirting with this level the last couple days. 1, 2, 3, 4, 5. 5 days just flirting. Are we going to break down? Are we a bull? Are we a bear? Am I going to get my fifth wave? I mean, it's possible that the fifth wave already happened. It's possible. I like to use Elliott wave to help with my analysis a bit, but I don't use it strictly as Elliott wave, because there's a million ways to count the waves, and I could be wrong. I'm not always correct. I've followed some brilliant Elliott wave analysts, and they've been wrong. And when they're wrong, they're not like wrong. They are ultimate, like totally off, completely wrong. So I don't like to use Elliott wave exclusively, but I like to use it as a potential roadmap. And the potential roadmap points to a fifth wave up here at 4270. And I think a lot of people have talked about this with Bitcoin too. And here's Bitcoin. Here's my 5-wave series for Bitcoin. Okay. And you can see here with Bitcoin, right? I know I'm kind of bouncing all over the place, but I think it's important to draw analogies between these two. You can see with Bitcoin how we've broken out with RSI. In fact, I'm going to do a little, I'll find a better chart. You know, let me finish my S&P analysis, and then I'm going to do a quick little tutorial on how I use the RSI for crosses, like 30-second tutorial that will turn into a little short, because we've been noticing that shorts are doing really well. So we're going to start, TRI is going to start doing more and more shorts, changing our content around just to make it easier for people to watch, and you know, help kind of get the information out there and get more people into TRI. By the way, for anyone that doesn't know, we're going to be moving to Discord soon too. Little fun fact. So once we're on Discord, I think a lot of people will like that. All right, a little bit of sip of the baby Coke here. Almost out. It's mostly water actually. Okay. So the question is, do we break down here or do we complete the fifth wave? We've got to go down to lower time frames to answer that. Let's go to a 12-hour first. So 12-hour, I would draw like this. And again, no consistency, no clarity here. This would have been the initial breakdown, right? So initial breakdown is here, breakdown 1. And then we've got the second one, and this is potentially breakdown 2. If we go to a lower time frame, like an 8-hour, so let's look at an 8-hour. So this would be potentially the breakdown 2. Usually things fully break down on breakdown 3. So Brian likes to do a 1, 2, 3 countdown for the breakdowns. 1M, second M, third M. So if this was our first M, and then this is our potentially second M, then we've got one more, and then the real breakdown happens. Potentially. But, you know, the reason I drew this parallel channel is because I think we need to break below. I like to see a break below this parallel channel, like this. And then that's where you're short, right there. That's your clear shorting opportunity. Right now, I think you're going to be early. I think you might get killed here. The market's trying very hard to stop people out, stop any longs out before it makes that one last move higher. Really, it's just stopping out longs and shorts and killing premium. It's doing everything it can to destroy anybody that can profit from market movement in either direction. I don't think there's any clear signal right here. When the RSI is sitting at this VIP line level like this, see how it's just right at this blue line? It's very, very difficult to trade. It's very extremely range bound. And, you know, even trading on these lower time frames is extremely difficult. I mean, you can see this 15-minute. Like, okay, fine. So here's an example of how you could trade RSI on a 15-minute chart. Okay, RSI trade on the 15-minute chart. So if I was trading this 15-minute, I would draw this trend line. Let's say I see RSI is here. I would draw the trend line, and I would wait for a cross of the trend line. So crossover, and then I can start hunting shorts. I would wait for a divergence to appear. So Then I've got, okay, price made essentially a higher high here, just barely, but RSI made a lower low. When you see this, combined with the crossover, that's when you can consider entering shorts. That's it. That's how you use RSI. It's very simple. Next one we're going to do is how to manage risk on trades, because I think, you know, especially in a volatile environment like this, you really have to be careful with how you manage risk. I'll get into that in a bit, but let's keep talking about what's going on here on the 15 minute. So you can see on the 15 minute here, RSI crossed back up. You could have drawn it twice, right here and also right here. So cross up here and cross up here, but the real bull doesn't start till we cross the VIP line. However, we had a 7, 8, and 9, so I'd expect a bit of a pullback, or at least a pause. Maybe it pulls back to here and then we bounce, or we just sit here and then we go up. Those are the two scenarios I'm looking at right now. I'm always cautious when a 7, 8, 9 comes in, especially on anything above a 5-minute chart. Can be dangerous for pullbacks if you're trading on shorter time frame. But my point is that the market is very, very unclear here, and this is where Elliott wave comes in to help us. And Elliott wave is saying we need one more push higher. So that's what I'm looking at. Completion of this 5th wave, and then we can roll over. That's kind of the my general thinking on the S&P. Let's take a look at the dollar. What's going on with the dollar? Okay, so there's a couple. Why I always buy, blah blah blah. I miss the Discord is better, but who's doing it? So nobody makes money. What do you mean by that? What do you mean who's doing it? Well, the market makers are making money. So the market makers issue the puts and the calls, and they get paid the premium. They sell it to the retail traders, and then they make a profit. The market makers will always make a profit. They know what's going to happen. That's why we have accumulation, distribution, and rallies and crashes. So you have a rally, and then you have distribution. And during the distribution time, they also run down the premium. So two things are happening. What? Okay. Okay, audio is skipping. I'm being told audio is skipping. Yeah, big funds. Okay. How did we fix the audio skipping last time? Because my CPU usage is only at 20%. I think I unplugged. I'm gonna unplug the mic and plug it back in. I'll do that. Testing. Okay, so everybody on YouTube is saying it's not skipping. All right, guys, can you hear me? Say yes. Can you hear me? It's good. Cheers with the baby Coke. All right. Cheers. We'll just keep going. Let's look at the US dollar. What is going on here? Weekly chart. So, as predicted, look at this 7 that came in. Boom. Reversal. But are we fully reversing? No. We can't fully reverse until we break high above this trend heuristic channel and my 50-day moving average. I really want to see a push above this before things can really take off. This is the one thing giving me a concern about the market completing that 5th wave, because if the US dollar pushes higher, right, and it does look like it's trying very hard to push higher, like this is the first push, and then we get a consolidation, essentially a little bull flag here, consolidation, and now we're trying to push above here. So if this can push higher to this midpoint possibly, so if we go back to like a weekly chart, right, so this is the entire uptrend of the US dollar right here, like this is your big uptrend. I'm gonna do a F11, by the way, make this full screen for you guys. This is the I kind of want to get rid of these lines because I feel like it's a bit confusing. I'm gonna get rid of all these. But that was just showing the different times the 7, 8, and 9s worked. So everyone should use Tom DeMark. This is This is the one I use in case anyone's curious. It's called Truenomic TD Sequential. I think this is the best indicator for tracking 7, 8, and 9s. And I just so you know, I turn off most of the, actually all of these are on. Why are they all on? Okay, where do I turn it off? Somewhere I turn a bunch of things off to get it to not show up. I don't know exactly where and why only 7, 8, and 9's showing up, but I do turn them off. So, you know, this is the one I use. Just load it and play with it, and you should be able to get... you only really need the 7, 8, and 9s to show. You don't need anything else. So, just a little fun fact. Okay, so you can see here, this is our big uptrend for the US dollar. And I do expect us to rally to this midpoint based on the daily chart. If we draw this downtrend line, right? So we've got this one here like this, and we've got another trend line like this. So we're on the other side of this downtrend line, and this would be our resistance area up here at 106. So that's where I could see us heading towards. Let me try to go a little bit lower on time frames. Let's load up RSI. Go to an 8-hour. Yeah, so this is where it's getting a bit difficult and confusing. RSI is not perfect, and there are conflicting signals. Like if I drew like this, okay, it would say breakout, and you long the breakout. However, it could also form an M, right, like that, and break down. So you've got to be very careful when you use RSI. It's not the perfect tool, and there's no perfect tool in the toolbox. You have to use a bunch of tools together. Same like when you build or diagnose anything. I cannot explain in this video that I'm trying to make in only 30 or 40 minutes how that is created, like mathematically. I mean, the simple terminology is that it just counts the candles. So if there's 7 up candles, up only candles, it creates a 7, and then an 8, and then a 9. And then if there's 7 down candles, like for example, here's your 9, 1, 2, 3, 6, 7. And then it comes to the 7th here. So there's 1, 2, 3, 4, 5, 6, 7, and then it creates a 7th right here, right after. But if you really want to learn about it, I would just look up Tom DeMark and start reading about it there. Tom DeMark sequential. There's entire papers written about this indicator. But the very simple explanation that is not scientific at all is that it counts the candlesticks in a certain direction. Okay, so DXY is kind of sitting in this area. Maybe it's creating, like, let's say we're starting a 5-wave up series. So this could be, you know, wave 1, and maybe this is wave 2, and we're just going to play in wave 2 for a while before then wave 3 happens. And then we'll have wave 4 and then wave 5. That's generally what happens, and how I could see, you know, wave 2 pull back further, and then wave 5 completion on the S&P. And then everything takes off, and then the S&P dumps, and the US dollar takes off with a 3-wave series all the way up to anywhere in this area, 1.618 to 1.109. This area would make sense, and then you have your pullback, and then your 5th wave somewhere, you know, maybe in this area. If we look back, so if we look left, this is kind of this would be your big resistance area right here, like that at 109, 110. That's a potential scenario I see for US dollar. Using Elliott wave, and based on what I'm seeing with RSI and a couple other things, I don't think this is done yet. I think we've got to mess around in this range a bit longer, allow S&P to rally a bit, maybe Bitcoin rallies a bit, to just flush out a couple more longs and shorts on both sides. Okay, that's DXY. Let's look at a couple stocks really quick. So Nvidia, I want to touch on Nvidia. I posted about Nvidia in my trading signals room, and how Nvidia printed on multiple time frames. So we've got a 7, 8, and 9 that came in on the daily. We got a 7, 8, and 9 that came in on a 3-day, along with potential divergence. Three potential divs. Where's the weekly? Nothing on the weekly yet, but we have it on the daily. We have it on the 3-day, and then if I go to lower time frames, we have it on the 12-hour, 8-hour. I mean, 12-hour and 8-hour, it makes, of course, it's going to be there because it doesn't trade the whole time. But on the 4-hour, we've got 6 potential divs coming in, and you can see RSI has totally crossed over. Like this was your uptrend. And then if we extend, so there's your first crossover, but we're still in my green zone. So then you would draw the next one kind of like this, and you can see how it can we make that perfect. See how it tagged this zone, went right above the highs, and then rolled over. So there's huge divergence right here, right? So price made a slightly higher high. Okay, very slightly higher. Make this a bit bigger so you guys can see. See how it's slightly, ever so slightly higher, just a little bit. But look at RSI. RSI made a lower low. So we've got a div. Okay, is it confirmed? No, but it is a potential. So if we break down from here, okay, if this M's out, this is a perfect M. If this M's out, where does NVIDIA go? Well, that's where chaos theory comes in. So we just take from the top of the M to the midpoint. Usually I like to go here rather than here. I like to go where there's a couple wicks rather than just one wick. Then it points to 133.7, which is right below all of this liquidity, right? So massive support here, all in this area. Go right below it and take out all the stops, and then we can take off higher. That would be the perfect short play on NVIDIA. It would make complete sense to stop out any late longs. Like here's early longs all here. Late longs are here. The late longs are post NVIDIA at one above 100. Like early longs are down here at 100, but anything above like 140, 150, that's a late long. So you take out all the late longs by having a huge pullback. Stop loss would be right above the highs, so 230 if you took a short, just right above the highs, which could happen if the S&P gets the 5th wave completed. You could get stopped out on the NVIDIA trade. I'm not saying go crazy with this trade just yet, but I'm saying it has a high potential of working out. I have already started entering a short position here. However, I am not like full size at all. This could go up, and I will add to my position. I'm not going to just cut it off because it's not very big right now. So I'm happy if this just sits up here for a while. I'm not expecting a huge rollover in the market until the end of February. I don't think we're going to get anything the rest of this month. I think this month is just to kill premium. But I wanted to point this out to you guys because I think it's showing serious signs of exhaustion, and there's large potential to short this. But I'm cautious because, one, the daily chart is still bullish, and my indicator that I made a long time ago, the Julian background trend signal indicator that's meant to keep me out of trouble, is saying don't short it. It's saying green. Whenever my indicator is green, like this right down here, whenever this is green, I'm not supposed to short anything because I'll probably lose all my money. That's why I made this indicator. So I'm being very careful and very cautious. You see, in almost all of 22, my indicator was only red. There was a very brief period of green here, but for the most part, it was red, which symbolized a massive downtrend in the market. But for the first time in a long time, in a year, it turned green. So this is where you have to be cautious. So no big shorts yet for me. Other big tech stocks, Meta is one I'm watching. So a daily chart. Oh, sorry guys. A daily chart breaking down. All right, there you go. Explain. Oh my god. I can't explain it because it's custom. So, secrets. I coded it myself. Okay, so this is also green. So difficult to short, but I mean, obviously this gap has to be filled at some point, and RSI is totally broken down. We also had an 8 and 9 on the 3-day chart. So here's your breakdown, but we're still above the VIP level. I think any kind of spike in Meta could make a decent short opportunity. I think 200 was the major resistance zone. If we can get a push higher, I think you stand a good chance to get into a nice short. Okay, so that's Meta. Those are kind of the main two I'm watching. I think that there's a lot of tech stocks that could potentially be nice short opportunities, but those are the only ones I'm really looking at right now. Why don't we get into, let's take a look at gold. Gold is taking quite the nose dive. As you guys know, I was pretty bearish on gold 2 weeks ago. So it completely rolled over. Let's look at the 3-day chart. Oh, and look what happened on the 3-day chart. Oh, a 7, and it rolled over. But you can see it doesn't always work, right? So here's 7 and 8, paused, rolled over. And there's multiple times where you had 7, 8, 9s come in and bounces, but here it didn't work. So just keep in mind that it doesn't work every time. It works most of the time, but not every time. Okay, so 3-day chart of gold. What's going on here? Here is your uptrend, which we broke down from. A weekly chart, we're also starting to break down, but we're still above this VIP level. So imagine if this is just wave 1. Imagine if this is just wave 1 of this gold uptrend. I don't know where wave 2 stops, but if this is just wave 1, like look at that, right? So if that's the bottom and that's the top, wave 3 could possibly point to up here, 2,300, 2,400 area. For then you pull back to this midpoint, and then wave 5 takes us all the way up to potentially up here, 2,755, even 3,000. I mean, that's what you're looking at if this is wave 1. I think I will do more analysis of gold, and I'll post in my signal room about it. I don't have enough time to analyze this the way I want to, but that's just a potential scenario. But I'm gonna look at it more closely. It takes a long time to really look at these charts on a longer time frame and map it out to see what can potentially happen. So it does take some time to do that. All right, so here's a daily chart. So you can see right where the breakdown happened, right, with RSI. You can see the divergence came in, right? So price made a higher high here. RSI made a lower low, and then we broke down, and we broke down hard. So if you would have taken this divergence right as it confirmed, you could have gotten in up here. And then it rolled over, broke down completely, and now I've just been kind of slowly heading lower. See, we did have a 9 come in on the bull side, and that kind of has put a pause in the rally to a degree. We rolled over a little bit further, and we've stopped here at this major support area. And now it looks like it's trying to reverse. This would be your kind of your downtrend right here, something like this. I want to see this there. I want to see a break above this to really get bullish. As of right now, I don't see anything that makes me want to get super bullish on gold, especially with the way the US dollar is looking. If the US dollar can push higher, then obviously gold is not gonna gold could stay steady. It doesn't necessarily have to fall just because the US dollar did, but it's going to have a harder time. Okay, it's going to be like swimming upstream. If we use chaos, where does chaos say? Now, keep in mind, chaos does not work as well on the downside as it does on the upside. So chaos points to... So if that's 1.618. So chaos points to this area where this gold rally should end. 1780 area. And that is a big zone. That would make sense. So I could draw a horizontal line right here. This is a big zone. Right down here in this area. I think that would make sense to take a lot of liquidity if gold rolled all the way down to 1770, along with the US dollar rallying. But let's see. This is a messy chart. A lot of these charts are very, very messy right now. I don't like the way RSI is looking. But for now, with the way it's looking on the daily chart, there's no turnaround for me with gold. If you want to trade these really low time frames, damn, I hate that it keeps doing that. If you want to trade these really low time frames, like, yeah, 1 hour's breaking higher. I mean, you could go to a 15-minute and say, okay, yeah, it's pushing higher. It'll reverse at some point, but you can't really, you're gonna have to trade more with price action. And I could do hours of video on trading with just price action. But my point is that if you're trading higher time frames like daily charts and you don't care about intraday fluctuations, indicators like RSI work really well. But because they are lagging indicators, you can't really use them as much on a lower time frame. You have to mostly pay attention to price action and liquidity zones. So you look at, okay, where are they going to stop people out to take the liquidity? That's probably where price will go. And then you set your trades based on that, rather than something like RSI. I mean, you can use something like RSI on a higher time frame to help you determine trend and major trend change potential. But for intraday trading, I would highly recommend sticking to simply price action and any indicator that is not lagging. Like 7, 8, and 9 is not a lagging indicator. It's just not. It's what's happening right now. However, something like RSI is a lagging indicator. Price action, just paying attention to the candlesticks and where they are, and liquidity zones are not lagging indicators. So those are a couple of examples of lagging indicators versus non-lagging indicators. So okay, this could be a great short, Josh. Lagging indicators versus non-lagging indicators. If you're a day trader, don't use lagging indicators. It's not going to work well. Stick to price action, which are the candlesticks. Price action and things like Tom DeMark could help you. But if you're going to use lagging indicators like RSI or MACD, or really any indicator with lines that's at the bottom of your screen, you want to stick to daily charts or higher. They're way more accurate for those time frames, and it's not as important if they lag a bit. Okay, there's your short. I think I did 2 so far. Chris, you can mark those. Mark the time so you don't have to look through it later. Okay, so that's gold. What do I want to talk about? There's so many things that I could talk about. Let's look at oil. Okay, so Chris told me we're 36 minutes in. So I'm debating, do we keep just going or do we go and do our after party show? Okay, so I'm gonna do oil, and maybe we'll touch on natural gas, and then we're gonna switch and do an after party show where I'll go into crypto. Okay, so here's oil. Let's go to a 3-day chart. So you can see, originally I drew this downtrend line a while ago. I'm going to delete a bunch of this stuff. Let's get rid of that. Let's go to a weekly chart. Damn. This full screen is nice, but it sucks whenever I try to change the time frame. So here's your weekly chart on oil. And you can see we're breaking out, right? On the other side. Kind of putting in some nice W's. Look at this weekly chart. Literally, I mean, I would say this looks like accumulation. If anything, I would say this is accumulation. But where, if we bounce from here, where do we go? So if I'm aggressive, we go up to 120. If I'm a little bit less, it's 115. So somewhere in that area is where, if we do bounce, that's where we go. Interesting to see what the weekly chart is doing here. Yeah, 3-day looking to reverse. Damn, I keep clicking that. Okay, daily. Daily, I would probably draw my RSI like this. It's almost too far away. I could go from here like that. Really, we're technically still below on the daily, and you've got a 7 that just printed. I mean, oil's just kind of sitting here. Maybe if the US dollar does rally, oil's going to get pushed down, of course, just like gold. So I don't like the way this chart looks. I don't have any clear signals on this. It does look like, to me, it's trying to put in some kind of bottom, but I think there are better trades and better assets to look at than oil here. I don't like it. I would, you know, sometimes things are not good for trading. And in my opinion, oil is not great for trading right now. I think you'd do much better if you traded crypto, gold, stocks. I mean, we showed multiple charts today that look a lot better than this oil chart. This oil chart just looks like it's stagnating, and it's just kind of taking people's money on both sides between 80 and 70. So that's kind of your range. I bet if you draw fibs here, where are fibs? All right, let's go right to here. Yeah, look at if you draw fibs. It just goes right down to this 88.6 zone. That's usually where markets go when they're ranging. If we go over here and we draw, let's flip it. So this was the first dump, and let's say we thought it would come back. So there, we draw it up here. I draw it here at the bottom, and look where we come to, 88.6, right? 88.6. If you were gonna short, you were playing the range, 88.6. Okay, let's do it again. How to trade a range with fibs. There's a short, Josh. Okay, so if you're in a range, you simply take the previous high and the previous low, and you look for the retracement at the 88.6 level. So here's our previous levels, and we came down to 78.6. It doesn't always come to 88.6. 78.6 and 88.6 are your entry points, and then it bounces. So we do it again. Let's take the range right here and here. Here's the high. So this time they decided to run the highs. You would have been stopped out. Okay, so then you were stopped out, so then you change the range. So now here's the high, and then you can consider shorting at the high and setting your stop a little bit above. So then that one broke down, and then you take the previous range again. One last time. And go all the way to the lows here. Right there. You see we went right to 88.6, a little bit below to run some stops. You could have also taken the range back here, but then you only hit 78.6. I usually find it helpful to do the most current one and then be careful with these wicks. I always like to set my stop a little bit below, so down here would have not been stopped. You know, and then we can see it's stagnated up here, so let's do it one last time. Did it work again? There's the low, there's the midpoint. Yes, 78.6 is tagged. So 78.6 and 88.6. That's how you use fibs to trade a range. Okay, I think we can move to the after party. I don't exactly know how this works, Chris, so what do we do? Okay, so we're gonna go to the after party. Anybody that's watching, you can find the link, I guess, on the TRI chat, and we will continue with crypto over there. Thank you everybody for watching, at least anybody in the public, and hope you guys have a great weekend. And anybody else, I will see you in the after party. All right, bye guys.